depending on if you guys are going to make this as a cap rate play, meaning that 9 something% that he was talking about in the offering memorandum, that's like an income investor mindset, right? Um, if and that's what they're trying to sell with the offering memorandum that I have in hand. So basically, what you'd be buying is the existing tenant, the existing income at 480K, and a plug and play yield at 9.25%. That's the cap rate they're talking about. What that means successfully, what the success of that looks like is that if the tenant was to stay, the rent was continue, and you would clip the checks. But what kills this strategy is that it's a short-term lease. You have less than 2 years. We're not, without that, we don't know anything about rent increases, and we don't have any rent renewal options. So it's really not a true cap play in the traditional sense. Like a real cap deal would be a 10 to 15-year lease, credit tenant, predictable income, stuff like that. I'm going to stop here so that I don't get long-winded, and I'll tell you about a redevelopment play, which is an operator mindset. Okay, so I'm going to flip this play to the redevelopment, the operator mindset. Okay, so let's just say you're not buying the tenant, you're buying the land because it's on Westheimer in a prime corridor. It's not far from the Galleria, not far from, what was it, Uptown. Let me see on that offer memorandum, not far from Uptown, not far from downtown, and about, less than 2 miles from the Galleria. So definitely good location, right? And so it has future potential. So, from the offering memorandum, it's got like 0.95 acres, right? So that's less than, is it less than an acre? Is it 0.95? So then it's got high traffic visibility, right? And so it does have some future land value. You know what I'm saying? So if success would look like this is like, say you reposition, like the tenant leaves, you reposition a new concept, you get the retail use is the same. It doesn't just end when that tenant leaves. So say it's not grandfathered, so you want to make sure that it's not any grandfather clauses that would prohibit that. How transferable if another restaurant were to come there for them to, with a liquor license and all that, but that's something. But what the killers for this, like if the market was to soften, or you're carrying the cost during vacancy, like I said, the zoning, any parking constraint, and just any redevelopment costs associated with how the tenants kept up the building, because restaurants are hard on buildings. So like I said, the truth about this is it's an awkward middle, and it's too short term for a pure cap rate play, like they're trying to position it, and it's not clearly underwritten as a redevelopment play. It's just like we're not fully comfortable calling this stable, is what the market's basically saying. So anyway, okay, so the last thing I'm going to say is, if the financing is really 20, the payment is real. You got to look at the payments and the taxes, and if that's something affordable on a month-to-month basis with zero income, for let's say 12 to 18 months, that's a good stress test number. Is that affordable? And if it is, and that's no skin off y'all's back, then potentially it's something you could deal with. All right, we just need to structure it properly as far as you're concerned. Okay. And lastly, I said the last one was the last one, but I just want to talk about some of the passive landlord liability stuff, right? You own the dirt, your name would be on the title. I already said that that would depend on how we structure it, and it would never be your own name. That's another area for me to worry about. But like I said, I'm a lawyer, so when stuff hits the fan, it doesn't matter. I'm suing everybody, right? So you can be sued. It's never going to be any document that could stop you from being sued. The question is going to be, can you win or shift the liability? So Even in a triple net lease, the courts are going to look at control and responsibility and not just labels within that lease. So you've got exposure triggers like the parking lot defects or drainage issues or ADA violations. Listen, remember I said fire, injury, death scenario. Your bigger concern is going to be like premises liability, right? Wrongful death. And so those issues are always going to tie back to structure or systems. And so the owner is always going to be in play. So even if we have indemnity clauses are not immunity. It doesn't immune you from anything. And so I've just given you, some real legal gems and legal advice, right? And it's serious.